Welcome to the Edge Market Update for the close on April 5th, 2024. And grains continue to consolidate and cool off after the nice March month we had in commodities. Early here in April, we have consolidated and made a secondary low to this point in time. So things look to be still in an uptrend, and we haven't lost any major support levels. So that remains good for corn and soybeans. So to start, we'll go over the May contract first on corn. We closed today at $4.34 per bushel, and we are trading right between this long-term negative trend line from last October and then from the low in late February, and we have a secondary low now at $4.24. So we're trading in the middle of those two trend lines. We closed below the 50 and 20-day moving average, but just slightly above the 9-day moving average. So a pretty neutral close here. Was encouraging to see that we have formed a secondary bottom here at 424. As long as price remains up here and we don't get any close below 424 next week, I do expect price to stay in this uptrend. It is nice because we have consolidated and let these strength indicators cool off some. We are at a neutral close here today on Friday, but money flows, we were at an overbought level in middle of March. We have cooled off here quite significantly, and we are turning back up towards running towards a neutral position. But if they do decide to take this market higher, we have a ton of room to run to the upside here on money flows. Long-term momentum has improved nicely. We've kind of flattened out since this sharp rise. We're still under the neutral reading, but however, certainly in a lot better position than we were in the month of February and late last year. So really, I would like to see us test this upper trend line here. That would be about 440 to 445 next week. If we could break out above there, certainly we could have a test of the 455 to 460 level in the cards, which was a prior high in late January. Maybe if you need to make some more old crop corn sales, that might be a good spot if we can break out of this trend line resistance. But I do expect that to act as pretty good resistance for next week. Moving on to new crop corn, we also remain in an uptrend. The new crop contracts have been stronger than the old crop. So I will note that for corn and soybeans, but we have a trend line support here from the low in late February at 446. Our secondary low is at 461 per bushel. We closed today at 472. So as long as we're above these moving averages and more importantly above this trend line support, which next week looks to be about 465, should be remaining in this uptrend. We have overhead resistance here at the 480 to 482 level per bushel. If we do clear that, easily could test that 490 and maybe even get back up to that $5 range eventually if we get some bullish fundamental news. But this will be heavy support here at 480 to 482. If we get a weekly close above there, that is a very big deal in my opinion, and could allow prices to navigate higher in that $4.90 to $5 range potentially here at some point. But we are trading above all the moving averages, the 9-day, the 50-day, and the 20-day, so that is good to see. And certainly money flows, were very overbought here in March. As we rallied, we had the opportunity to cool off, and we have moved higher. So potentially could get back to some overbought readings next week if we do rally next week. Strength indicators are fairly neutral right now at this week's close. Long-term momentum, we are almost back to a neutral level here in the long term. So that's good to see. Things are kind of flattening out. So we did cool off, but we never lost really any big support level here. So that's good to see on new crop corn. Moving on to old crop soybeans for the May 24 contract, we closed the week on a positive note at 11.55 today. We are trading above this uptrend here for the trend line support from our low at 11.28. Our secondary low was formed in the opening range of the first 3 trading days in April at 11.68. So as long as we're above 11.68 moving forward, really don't have any concern. I believe price will remain in an uptrend. Our big resistance level to start will be that 1217 to 1226 range. 1226 goes back to the late January highs here. If we do break out above there, I could see us also trying maybe to test 1252 before our next cool off. But really, a big level to overcome first will be that 1226. Might be a good spot to consider making sales if you have any needs for cash flow in the short term. But really like this volume bar here. The green bar shows we had some good buying volume today. That was nice to see. We closed right on the 50-day moving average, but just a touch below the short-term moving averages here. But again, as long as we're above 1168, I really don't have any concern on old crop soybeans. Strength indicators, we were very overbought here in March when we rallied sharply. We had a chance to cool off, and now we're back at a neutral reading. Money flows, again, were very overbought in March. We cooled off, we bottomed, and now we're turning back up. So it really looks like this market might want to run higher here, and that would be confirmed if we can get some closes above these moving averages in the 1188 to 1191 range. Long-term momentum, we're almost back to a neutral reading in the long term, but certainly a lot better conditions than we experienced in January and February of this year. So that's very good to see. And finally, to finish up with new crop soybeans on the November 24 contract, we closed today at 1185 as well, and we remain in this consistent uptrend here. So we have our low here at 1122 in late February. We made our secondary low at 1167, and then we have our April low here at 1172. So as long as we're above this range, really don't have too much concern. I would be concerned if we lost this 1167 area. That might open up some more downside price action. But for now, the trend is your friend. We're remaining in an uptrend here. We're trading quite a bit above the 50-day moving average at 1170, and we're trading right at the 20 and 9-day moving averages at 1185. So certainly have the potential to run up to that 1216 resistance level from January and from this recent high we had. And if we do, let's see how the market reacts there. And I still want to see this gap filled between 1236 and 1245 from the first trading day in 2024. I'd love to see us fill that. We tend to fill gaps here on these commodity markets. So eventually I'd love to see that filled, and at that point maybe a time to consider doing some hedging on new crop beans as we approach planting season here. So again, neutral reading here on strength indicators. We cooled off nicely after the March rally on money flows, and we're turning back up. We're above a neutral reading there, and we're actually positive now on long-term momentum in this market. So first time in a long time that we've been positive, actually since last November when we had some sell signals on new crop beans. So with that being said, hope everybody has a good week. The first planting date for multi-peril coverage was actually today for corn, and it's April 10th of next week for soybeans, which is Wednesday. So if you have any questions on crop insurance coverages or anything of that nature, please reach out to us anytime. Thank you for watching, and have a great weekend.